Today's week getting started on a very positive note here as the NASDAQ maintains its gains up more than 1.5% after suffering its worst week since March last week. And our next guest says that deals being made right now in mergers and acquisitions, we just talked about NVIDIA and ARM Holdings. He says that uptick in activity is proving that sentiment is turning a corner. So here to discuss that theory with us is Ryan Detrick, LPL Financial Senior Market Strategist. And Ryan, we're up more than 1.5% here today. So talk to me about why you connect those dots and say, look, we might be moving higher here.
Yeah, Zach, we had this record run, right? We know that. But a whole way while the economy was recovering, there weren't a lot of big deals. And what's that tell us? Well, you rarely see big deals when you're in a recession. You rarely see big deals when there's issues with the credit markets and with the bond markets. But now all of a sudden, we're starting to see that. And I get it. Everyone says, oh, my goodness. But in 1999, 2000, there were a lot of big deals also. But we're not seeing quite the same thing. You mentioned the chip one, but look at biotech, right? The deal Gilead did. Look at biotech stocks today. There are some really still some good valuations there with biotech and chips doing well. And then the whole, Oracle and TikTok deal, it's kind of one less, I guess you call it headache for the market. What's going to happen with TikTok? Is it going to go away? With a 12-year-old daughter, I can tell you, I don't want that to go away. It's kind of a built-in babysitter, So, you think about it, some of those things that we view it, yes, market's really stretched. We can talk about that. Bigger picture, my goodness, 6 to 12 months from now, we think these are really positive steps.
Yeah, there's a lot of people benefiting from that TikTok news. We would highlight Fastly shares too, a company that we talked about before, kind of being levered. A lot of their revenue comes from TikTok. If the U.S. business shut down, that obviously wasn't going to be a good thing. But shares enjoying about an 8% boost here in Monday's trade. But beyond that, I guess we also got positive news on the vaccine front, which really benefits sectors, whether it is tech or not. But we saw the AstraZeneca trials with University of Oxford researchers resume. We got Pfizer's CEO coming out and saying that you could have a vaccine come out to those frontline workers by the end of the year, before the end of the year. So talk to me about how that might impact sectors differently here, if that is true. And we do see, I guess, things improve on the health front quicker rather than later.
Yeah, what's benefited, we know the large cap tech names, some of the healthcare names. But if you get the economy opening up, if you get the better news on the vaccine sooner than maybe we expect, that's going to help some of those cyclical value names, specifically materials, look really good to us, and industrials. We don't like financials as much. They're still lagging. Yields are still low. But if you think about tech, just can't always go up, right? We still like tech. But if that were to give the baton away, the materials, look at something like chemicals. Chemicals are really looking good here. U.S. dollar still looks weak. A little bit weakish U.S. dollar tends to be a tailwind, if you will, for kind of large cap stocks and emerging markets. Look at the data we're seeing out of China. The data, no one really trusts Chinese data. I get it. But what did Hyatt just say? They said people are staying at hotels as much in China now last month as they were back in September. There's a real global recovery taking place here. And if someone wanted to go into the cyclical value areas, we would suggest doing the materials and industrials, but sticking probably with a little bit of a growth overweight still with who brought us to the party, specifically technology and communications.
I'll push that point too a little bit further, because we have seen strength even with shakiness on the health front or what have you. We've seen strength in the housing sector. So when you dig into that material space and who else you're seeing there for strength, what are the specific names that you look at in industrials and materials that you enjoy right now?
Yeah, I can't talk about individual equities, but again, specifically, we like some of just the big ETFs when it comes like XLB. That's one of the big materials ETF. And you mentioned housing. Housing, I guess, is more consumer discretionary, but nonetheless, it's amazing. This is the first recovery we've ever had, recession we've ever had, where the housing market didn't even slow down. So you got to think that along with copper. Copper is breaking out to a 2-year high. In our opinion, you see that strength out of copper. That's another sign the global economy is in fairly good shape in our view. And again, historically higher trending copper tends to pull the 10-year yield along with it. So we think the 10-year yield will probably play catch up the second half of this year, or even, I guess the fourth quarter of this year. It's not even the second half anymore, right? The fourth quarter of this year. And that again can suggest the global economy, or U.S. economy, is slowly continuing to improve here.
When we talk about risks too in the back half of 2020, because we haven't discussed those too much, obviously the election looming, uncertainty there for a lot of investors, I guess, depending on how you look at it. How do you see volatility? Maybe we saw it last week continuing here with that on the horizon, as well as, I guess, more question marks for how long this recovery, lockdowns potentially, if we have to go back to those. We're seeing that across the globe here. Israel just doing that too. So, talk to me about some of those risks that you're also digesting.
Yeah, I mean, we've got the same risks as everyone else. Like you said, if you have more waves coming out, if you get some bad news on the vaccine, but one of the risks I think is just the overall sentiment. I mean, we talked about sentiment improving from a market's point of view, but a lot of those small traders have done very, very well with those large cap tech names. I mean, there's a lot of optimism out there. And a funny thing about September and October during an election year, those tend to be weak months. Don't forget, October's the worst month of the year during an election year. So seasonality is not really doing anyone any favors. So maybe a little bit more of a pullback. I mean, the NASDAQ 100, 2 weeks ago, right about now, was 30% above its 200-day moving average. That's about as historically stretched as you're going to see. We know tech and big cap tech have come back, but again, under the surface, look at small caps. I mean, small caps all of a sudden are starting to outperform. There's a lot more small caps than large caps. So we're encouraged by some of this rotation that we're seeing. But overall, I think this overall sentiment being a little too frothy still is maybe one of the near-term concerns we have. But the economy is going to justify any pullbacks, and we're going to use it as an opportunity for a continuation of higher prices, at least out into the first half of 2021.
No, it's a very good point. I mean, I didn't highlight the Russell here, but technically outpacing the NASDAQ too, up 2.5% to the NASDAQ's 1.6 gain for the time being. But we'll have to leave that there. Ryan Detrick, LPL Financial Senior Market Strategist. Appreciate you sharing your thoughts.
Thank you.